I'm very happy to welcome you to this webcast in which Infront ASA will announce their half-year report. Ready for you straight from Oslo is CEO and founder Christian Nesbæk, as well as CFO Max Hofer. Over to you guys.
Hello everyone. Thank you for attending this webcast. We will go through the results. Yeah, we can change. Yes. So we can see this quarter a nice revenue growth of 7% year on year, despite the low Swedish crown. A low Swedish currency has created some headwind for us since 50% of our income is in Swedish crowns. We have now a 5-year low exchange rate and a 6% drop this year alone. So this is hurting our revenue. I can inform that in invoice currency, the revenue is record high this quarter. So expect for the currency situation, the market is quite good. We are more or less on budget in all areas so far this year, and when it comes to terminal sales, we see that 2 of our offices outside the Nordics are picking up speed. UK and South Africa have closed more terminal sales than ever before. It's a little early to say that we are where we should be, but we got a lot closer this quarter. I'm very optimistic. It's looking really good. I can confirm that we have high activity levels in all segments and all regions. So our strategic goals and how to get there maintains. A combination of these 4 areas we expect to bring us to a solid position, that meets our ambitions. So the first step here, we continue to grow the number of terminal users in the Nordic, but it is the solution business that really will fortify our position in the Nordic, and it's developing as planned. So outside the Nordic, we see an uptick of leads coming from the outside of Nordic and an increased success rate on the sales cases. Product R&D, having a user-friendly, function-rich and content-wise solution is our top priority, and we continue to invest heavily in product development. And 4, we see that it will not be realistic to achieve this position without doing several acquisitions, and this is something we continue to work on. So, operational review. So the terminal and solution sales are going quite well. As mentioned earlier, some of our new offices are picking up speed. We have also this quarter, or a little earlier actually, established a sales force following up leads from the German-speaking area, and it has been quite successful, and we have closed many deals and got many new users. We see that the marketing effort we have done so far this year gives results, and that we achieve a satisfactory outcome from the leads we get. We will continue to step up the marketing effort going forward. It's expensive in the short run, but in the long run, it's clearly a win. So when it comes to solutions, we have delivered phase 1 with SAB and has started delivering phase 2 that will be ready at the year end, hopefully. At Solution, we expect at least 1 more contract this year, I will say. We see a quite high demand, but we have it's a limit for what we can deliver, so it might be possible to invest a little more in manpower and picking up speed. We will see if the demand continues and we manage to close more deals than expected. Yes, it's next. So when it comes to news and analytics, the situation is quite stable. Don't mind too much the downtick in news and uptick in analytics. It's more internal organization, so it's quite stable. But a lot of the business, especially news, is in Swedish crowns. So we get a little headwind there, but it's quite stable. Stable business. Okay, over to you, Max.
Thank you, Christian. Now over to the financial review for the second quarter. In Q2 2018, we saw revenues of 68.1 million Norwegian crowns. That is 7% higher than last year's. During the quarter, we experienced significant headwind from a weaker Swedish crown, and this alone impacted our top line negatively by more than 1.5 million Norwegian crowns. So far this year, the Swedish crown is down 6% against the NOK. Our gross profit increased from 44 million to 46 million year on year, representing a gross margin of 67.5% in the period. EBITDA increased from 4 to 11 million NOK, resulting in an EBITDA margin of 16.1%. In Q2 2018, we saw an increase of revenue to 68.1 million versus 64.5 million for the same period in 2017. The majority of this increase is attributable to the acquisitions of 6 users and news, as well as the acquisition of Inquiry, which is now named Infront Data. As indicated already, we have had some significant headwind from FX movements, specifically from a weaker Swedish crown, which has been on average 4.4% weaker this quarter compared to last quarters and also compared to last year's. Roughly 52% of our revenues are accrued in Swedish crowns, and the negative impact from that is more than 1.5 million in the period. Adjusted OPEX increased from 51.2 million to 57.4 million, which is a 12% increase year on year. The increase was driven by a larger customer base, driving higher data costs, the opening of a new office in Helsinki at the end of Q3 2017, as well as increased investments in sales, marketing, and product development, which will ensure that we can grow also in the future. The group had 129 employees at the end of the second quarter. Gross margins were stable at 67.5%. Adjusted for FX movements, gross margin was 69.4%. Looking in more detail at the regional performance, we can see that all regions are showing increased revenues year on year. In Norway, revenue grew to 27.4 million in the period. In Sweden, we can still clearly see the positive impact from the 6 Inquiry transactions. Revenue increased to 35.4 million, up from 32.8 million last year. This is a growth of 8%. Adjusted for the weaker Swedish crown, revenue would have been 36.9 million Norwegian crowns, which also is a growth then of 13%. Other regions are showing improved organic growth as our investments in increased sales and marketing in new markets starts to bear fruits. The revenues are up 44% to 5.3 million. When looking at the per segment development, we see that terminals and solutions account for almost 2/3 of our revenue. Terminals and solutions increased to 44.9 million, which is a growth of 12%. News, analytics, and other showed a flat development year over year. Looking at our cash position, we had more than 101 million Norwegian crowns in cash at the end of the quarter. The cash flow from operations in the first half contributed 18 million Norwegian crowns. Cash flow from investments was negative 24.7 million. During the period, Infront bought the remaining stake in Inquiry for 5.8 million Norwegian crowns and completed the purchase of 6 news. Total payments related to the 6 transactions were 12.8 million in the first half. Finally, the company spent 6.1 million Norwegian crowns on capex, of which 5.5 million was capitalized software development. In May 2018, Infront paid out a dividend of 0.4 NOK per share to its shareholders. The total dividend payment was 10.4 million Norwegian crowns. Infront has a very strong balance sheet with an equity ratio of 58% at the end of Q2. The company is free of any financial debt and only has some financial liabilities linked towards the 6 transactions. Goodwill and customer contracts relates to the recent acquisitions of 6 Inquiry. Capitalized R&D is stable as the company has a policy of expending the majority of development costs directly. As Christian has pointed out, our ambition is to become a top 3 player in Europe within the next few years. We understand that this is a very audacious goal and that we need to complement organic growth with targeted, value-accretive acquisitions. In order to support our strategy, we hired an experienced and well-connected M&A advisor at the beginning of 2018. Together with this advisor, we have spent significant time on working on our long list of targets and increased our efforts on a short list of 3 to 5 opportunities. Over the past few months, this pipeline has been strengthened considerably. We stick to our prioritization of opportunities, whereby we are looking primarily at acquiring a customer base. This kind of transaction has very good synergy potentials and at a limited downside risk. As a second priority, we are also interested in companies that add functionality and product breadth to our offering. In summary, Infront sees continued user growth for its core products. Interest in our web solutions remains strong, as the sales pipeline both in the Nordics as well as in new regions for all of our products is expanding. Infront continues to further pursue M&A targets and is making good progress in its efforts. We thank you for your continued interest in Infront, and we will now take a few questions from the audience. The first question that I have here is, you have been opening a few more offices over the past years. Is it a clear strategy to open additional offices? Christian.
Okay. We are for sure expanding outside the Nordics. Exactly how to do this, we will continue to evaluate. Opening offices is one way. Maybe an acquisition can help us, or we might also serve other countries from the offices we have. So we will see what kind of model we think will work best for us. But I guess it will be realistic that we will have more local presence in Europe, I will say.
Okay. Another question we got here is, you have pointed out sales of web solutions to, amongst others, Nordnet and SEB. Will solutions become a more important element of your revenues and product portfolio in the future?
Right now, we are mostly focusing in the Nordics with the solutions for several reasons, and one of them is that we have a quite large market share here in the Nordics, so the potential for terminals are a little more limited than it is outside the Nordics. The solution is clearly helping us to grow. But we see that it has been very, very successful. It has been so well received, and we have got so much interest that we will clearly look at potential client outside the Nordic also. But we also need to expand the manpower and so on to step it up. So we are just a little careful. But another reason for solutions to be very important for us is that the technology itself, we believe it's the future for terminals also. So we are using more and more HTML5 components into the terminal, and those components are from the solutions team. That was one of the reasons why we went into the solution business, because we believe that this technology is the future also for the terminals, and we wanted to be expert on this area.
Okay, thank you, Christian. We will now wrap up our webcast for today. Thanks again for your attention and interest in Infront. We will be back with the Q3 report on November 9th, 2018. In the meantime, please stay connected by visiting our website or registering on our IR mailing list at ir@infrontfinance.com. Thank you very much.
Thank you for attending.